Hello, this is a quick video update for the Hurst Trading Room for the 10th of January 2013. As always, please make sure that you have read and understood these disclaimers before we go ahead and look at the markets. The reason I'm recording this video update today is because some interesting things have been happening in the euro to US dollar, and in Monday's video I chose to stand back a little bit from the euro to US dollar because it wasn't clear to me what was going on, and things have become a little clearer, I believe, and so I thought I should post a quick update because I am able now to make some trading decisions in the euro to US dollar, and I thought that I should share those with you. So let's take a look at the markets. Here is the euro to US dollar. And yesterday, the analysis on my default chart, in other words, the chart that I'm using to track the default analysis that Sentient Trader is performing, changed. It, as you can see, here is the chart. Sentient Trader suddenly decided that it was going to place the 20-week cycle trough in a rather unusual position early in December. And so here is that 20-week cycle trough, as you can see over here. So this is the default analysis. In other words, I'm letting Sentient Trader just do its own thing. And what you'll find is that sometimes when the cycles are stretched, when the markets are doing slightly unusual things, sometimes that default analysis isn't absolutely the right analysis, and that is what I think is happening at the moment. Now, in Monday's video, we had something very similar to this. We had the 80-day cycle trough over here at the beginning of October, the 40-day cycle trough over here in about the second week of November, and Sentient Trader was still expecting the 20-week cycle trough to occur round about now. We had a nest of lows round about now, and so this was the default analysis that we looked at in Monday's video. And yesterday, this all changed, and of course, Sentient Trader has positioned the 20-week cycle trough over here in early December. So when I saw this happening, I took a look at this analysis and realized that it is, of course, a possible analysis. As you can see, there was a strong bounce up in early December. You can see that really strong bounce over there in December, an unusually strong bounce for what looked as if though it was probably only a 20-day cycle trough. And so that's why Sentient Trader has positioned the 20-week cycle trough over there. It's not impossible that the 20-week cycle trough is there in early December, but I think it's unlikely. And what particularly puts me off that position for the 20-week cycle trough is the cycle shapes that result. So let's just have a look at the cycle shapes of the two 80-day cycles that constitute that 20-week cycle with this particular phasing. Okay, so here is the M shape of the first 80-day cycle trough, or the first 80-day cycle coming into that trough over there at the beginning of October. That looks like a good cycle shape. It's an M shape, as you can see. And let's have a look at the cycle shape of the second 80-day cycle. And here it is over here. Now, that is not a good cycle shape. Why? Because the central part of the M shape has dropped below both the start and the end of that cycle shape. It is what I call an inverted cycle shape because the central part of the M has dropped below both the start and the end. So if I was to draw that M shape here, it looks a little bit like that. So although it still does look like an M, it's not a very good M. It's an inverted cycle shape. And inverted cycle shapes are generally an indication of a poor analysis, of there being something wrong. So although this phasing is not impossible, and it is possible that the 20-week cycle trough did indeed occur there in the first week of December, it's not impossible. I don't like it very much, and another reason why I don't particularly like it has to do with the sequence of FLD and price interactions that have followed that 20-week cycle trough. If we zoom in and take a look at the interactions, you will see here, first of all, that that trough occurred here only just below the 20-day FLD, and you would expect a deeper trough for the 20-week cycle. And so here is our category A interaction. Okay, that's not too bad. The next interaction surrounding the 20-day cycle should be the B interaction, okay, which is price coming down towards the FLD, and then you expect price to track along the FLD, which it did. So far, so good. But then, of course, you expect price to break up above that FLD in a C category interaction. Now, in this particular analysis, you can see that price broke up. Well, it didn't really break up. It possibly broke up for a day and then came down again, which is not really good enough. And so that sequence of price and FLD interactions is not good enough to my mind, and so I don't particularly like this analysis. What can I do about it? Well, the one thing that I will do is keep tracking it, because of course I do always believe in tracking the default analysis, and I am going to create another chart for the euro to US dollar where I am going to make one very small change. Let me show you what I'm going to do. I'm going to move that 20-week cycle trough away from the beginning of December. That is really easy to do, and I'll show you right now. You simply double-click near that 20-week cycle trough, and I'm going to push it off to the right-hand edge of the chart by moving it to that bar there on the 4th of January. Right-click and select to pin that trough in that particular position there. Sentient Trader will perform the analysis again, and you'll see it will return this analysis to the state that it was in on Monday, which indicates that we are still expecting the 20-week cycle trough to occur. Okay, there we go. There is that updated analysis, and that is the same analysis that we were looking at on Monday as an alternate analysis. And I still think that this is an alternate analysis, and that the 20-week cycle trough might still be ahead of us. It is an alternate analysis, and you can see here you can see the first 80-day cycle, the first part of the 20-week cycle, and then of course this would be the shape for the second part. This is still a possible analysis. It is my alternate analysis. My preferred analysis places the 20-week cycle trough over here. Now let's quickly take a look at that analysis, because I have something to say about that as well. Here is that analysis with the 20-week cycle trough, as you can see, pinned to the middle of November. Let's just zoom out and take a slightly closer look, and let's just draw these cycle shapes here. And so here is the 20-week cycle coming down to over there, and so I think that looks better to my mind. And as you know, there is a bit of a discrepancy at the moment between the euro to US dollar and the British pound to US dollar. The British pound to US dollar, and this is in the videos that I recorded on Monday, so I won't repeat it, but the British pound to US dollar is in a short F category trade over here, and for that reason I was staying clear of the euro to US dollar. However, something has happened in the euro to US dollar, which is of some interest, and I am now in a position where I'm willing to make a trading decision in the euro to US dollar. So let's just quickly revise what we were speaking about on Monday here for the euro to US dollar. Here is the position of the 20-week cycle trough, and here is our sequence of FLD and price interactions. There's our category A, and here's our category B as price comes down to the 20-day FLD. Now, as you can see, it dropped a little bit below there, which is slightly unusual and not really expected, but then it pulled back up again in what I've been speaking of as a category C interaction. And then, as we discussed on Monday, I'm looking at D happening over there, E over here, and F over here, which would indicate that the next thing that should happen is a category G interaction. So price pulls back to the FLD, and I don't want to go long under those circumstances. Okay. However, there are a few things about this sequence of FLD and price interactions that raise some questions. And on Monday I had the questions, I didn't have any answers. Today I believe I have some answers. So let's discuss those questions and the answers. The first thing is this BC category interaction, which I've mentioned in previous videos, is quite deep over here. Okay, we don't expect price to cross down like that and then cross back up over for a BC interaction. We expect price to track along the FLD. So that's my first question mark. The second question mark is this whole sort of sequence of interaction over here. As I mentioned on Monday, price here between D and F is tracking along that FLD, and we don't expect price to track along an FLD between category D and category F interactions. Tracking is something that happens between B and C, and something that happens between G and H interactions between price and FLD. So there are two question marks surrounding what's happening over there. And I've spent a bit of time thinking about it and watching the markets develop. The reason why I opted for this particular analysis on Monday is because this is what's happening in the British pound to US dollar as far as I'm concerned, and we're still in a profitable short category F trading opportunity in the British pound to US dollar, so that's going very well. But the more that I looked at this chart, I realized that something else is very possibly happening. So now let me present to you what I believe is what is really happening in this particular chart. And one of the ways in which I perhaps help to solve this puzzle is I took a look at another FLD. So let's do that. Here is the 40-day FLD. Now, as you know, markets are a fractal, so what you see happening in the 20-day FLD, you also see happening in the 40-day FLD. And depending where you are in the FLD trading strategy course at the moment, you might have come across this, or you might not yet. But anyway, we can take a look at exactly the same sequence of interactions between the price and FLD with the 40-day cycle, as well as with the 20-day cycle. So let's have a look at the sequence of interactions that we're seeing quite clearly here in the 40-day FLD. So where price crossed up above the 40-day FLD, that's a category A interaction. Where price dropped down towards the FLD and tracked along it for 2 days and then bounced up again, that is B and C on the 40-day cycle. Okay, and what we saw last week, following New Year, was a category D interaction on the 40-day cycle. Now, I know that you're very used to thinking about things on the 20-day level, but when thinking about things on the 40-day level, you need to keep a clear head about you. And let's just remind ourselves what happens around a B and C category interaction. What happens is, of course, price is moving down to form a trough of the cycle whose FLD you are looking at. That implies that this trough over here is a trough of the 40-day cycle. Okay? It is, of course, an early trough of the 40-day cycle. We'll measure some bars in a moment, count some bars, but it's an early trough of the 40-day cycle. And the category D interaction occurs as price moves down into the trough of a cycle 1 degree longer than the FLD that you're looking at. In other words, implying that this move down is a move down into the 80-day cycle trough. Okay? So the 40-day FLD seems to indicate that this trough over here in the middle of December should in fact be a 40-day cycle trough, and that the trough that we saw last week should be counted as an 80-day cycle trough. Now, first of all, is that possible? Let's count some bars. Right, so if we count the bars from that 20-week cycle trough, let's first of all consider this trough here, which formed last week in the first few days of 2013. Is it possible that that is a trough of the 80-day cycle? 52 bars elapsed. So yes, it is possible. The average length of an 80-day cycle is in fact 68 bars. If that confuses you, then you must go back to your foundation material where we discuss the average length of cycles and so on. The average length of an 80-day cycle is in fact 68 bars or 68 days. So 52 days is a short 80-day cycle, but it is possible. And certainly the sequence of FLD and price interactions when considering the 40-day FLD makes it seem very likely that that is a trough of the 80-day cycle. And let's have a look at this trough over here in early December, which we are now considering to be a trough of the 40-day cycle, not the 20-day cycle. Now, as you can see, up to the Friday, 24 bars had elapsed. 24 bars is fairly early for a 40-day cycle, but of course a weekend followed that immediately. Now, as you know, even though we're taking a break over the weekend, the cycles keep moving, and so what very possibly happened is that price over that weekend would have kept falling, and therefore we should really more accurately position that trough on perhaps the Sunday. Okay, so it fell to its low point on the Sunday and then bounced up again. If we consider the Sunday to have been the trough of the cycle, then as you can see, there would have been 26 days since the 20-week cycle trough before that trough formed. And again, that is an early 40-day cycle trough, but not an impossible 40-day cycle trough. Okay, so what I think is actually happening in the euro to US dollar at the moment is that we should see a 40-day cycle trough in early December and an 80-day cycle trough in the first few days of 2013. So let's take a look at a chart which has that analysis presented upon it. And here is that chart. It's very easy to create a new chart in your workspace and apply a different analysis. As you can see, I have the 20-week cycle trough over here in the middle of November, and I have shifted my 40-day cycle trough over here. In fact, I haven't positioned it on the Friday. I pinned it to the Monday just because I think I wanted to give that 40-day cycle just a little more room, and I couldn't position it on the Sunday. And so this is the analysis. Now let's have a look at our sequence of interactions according to this analysis and see if it works. First of all, here is our A category interaction. Okay, that looks good. Our BC would be around about the 20-day cycle trough, which is over here, which means that this is the B interaction as price comes down there. And you will know that in the previous Hurst Trading Room videos, I have in fact discussed that possibility. Back in December, I was considering whether that might be the B category interaction, and this was the C category interaction over here as price bounced back up again. The D category interaction occurred over here back in early December as price moved down to the 40-day cycle trough, which is over here on around about the 9th or 10th of December. That's our 40-day cycle trough, which means that our E category interaction occurred over here as price broke back up again and achieved its target over here, and you can see that is quite an accurate projection, a very characteristic E category trade which achieves its target very accurately, and then it's all over. Then things get slightly murky again, because of course price broke down over here surrounding the holiday season. Yet another reason why you should stay clear of holiday seasons in the markets, but possibly that was our F category interaction as price crossed down over there, and we might have seen a G and H category interaction over there. Also right around the festive season, surrounding New Year, so we don't have a lot of data to work with, and the markets were fairly volatile, so not very easy or very clear to see, but certainly very viable, very possible. And then, of course, price came down and formed what was most probably, or possibly, an 80-day cycle trough over here, an early 80-day cycle trough. So this is a very viable alternative analysis to what's happening in the euro to US dollar. And what this does do is it brings the euro to US dollar closer in line, I believe, with what's happening in the British pound to US dollar, with this move down from the 20-day FLD, the F category short trade that we're in the British pound to US dollar. Now, if this analysis is in fact the true analysis that is playing out, then what do we expect next? Well, we expect next an A category long trade in the euro to US dollar. And so I am standing by to enter an A category long trade in the euro to US dollar as price crosses up above this 20-day FLD over here. Now, if this analysis is not the true analysis, if it's not really the analysis, things don't turn out in this way, then what is the worst that can happen? Well, one of the things that might be happening is that, in fact, this trough in early 2013 is a trough of the 40-day cycle, and we have a chart which is indicating that, in which case this trade here would not turn out to be an A category trade, but it would, of course, turn out to be an E category long trade. So if that happens, that's no problem, because it is also a profitable long trading opportunity. The worst thing that could happen to us is that this in fact turns out not to be either an A or an E category trade at all, but our third and, in my mind, least likely alternative is that this was the F category opportunity here, and we're going to see a GH category interaction over here. So that is the worst thing that can happen. If that happens, then what do we do? Well, I will still be stopped in, possibly, into my long trade, and I will simply reverse my position as soon as I have any indication that this is what is playing out. The level at which I would reverse into the short category trade is not provided to me by the 10-day FLD. As you can see, I've just displayed the 10-day FLD, and the 10-day FLD is right in there, very caught up in the price action. So I don't have a clear reversal level at the level of the 10-day FLD, but I do have a very clear trend line developing over here. So the level at which I would reverse into a short H category trade in the event that it turns out that a long trade would have been a mistake will be the level of that trend line. So that's what I believe is happening in the euro to US dollar. What you will often find is when there is some confusion, some murkiness in the markets, it just takes a little bit of extra sort of staring at the charts for a while and thinking about things, and often the picture emerges, and that is exactly what I think is happening in the euro to US dollar at the moment. And so from taking a position of standing back from the market and not being sure what to do, I'm ready now to make some confident trading decisions. I look forward to seeing you at the beginning of next week in the Hurst Trading Room.